Good afternoon, everybody. How are you guys doing? All right, how much time do we have? 16 minutes. If anyone wants to see any earnings trades, put them in the comments, or we need to do them pretty quick. All right, let's see what's going on with the market, though. I've been busy making a video. Although I haven't even checked the market since last time. I checked it once. I saw that my calls aren't working out that well. All right. I bought the dip earlier. It was rallying for a little bit, but then it looked like it was petering out. Anyway, let's go check it out now. We got 15 minutes till the close here. Of course, the Fed meeting tomorrow. Some people are expecting maybe a surprise rate cut, or anything could happen. All right. All right, so here we have it. Today's action. We opened down here in this area where we expected buyers to be, and there was definitely buyers there. Rallied for about an hour, then came back into that same area where we expected buyers to be, and there was buyers there again. Well, I'll take that. Let's look at the NASDAQ. The SPYs are also holding that vertical trend line that we had on there. Same thing too. It looks like NASDAQ gapped down, rallied, and is now kind of jacking around. I think people are just biding time in front of Powell, see what he has to say. All right, well, let's see if there's anything else that's really moving. Bitcoin, no. VIX is up 2%. VIVIX is up 2% because the market's down a little bit. Oil's up 3%. I just sold all my XOMO. I don't know why I ever bought that freaking thing. No, I do know why I bought it, because I wanted some exposure to that part of the economy, but I no longer do. I've rebalanced more into the gold and crypto part of the economy this month. So, all right, let's look. My model. The model portfolio is no longer right because I just changed I just sold some stuff. I'll tell you what I did if you guys wanted to know. I sold a little bit of GPTY. I sold XOMO, and there's a little bit of cash in the account that had built up. And I took that money and I bought a little bit more Y triple Q in case the market goes down again. I added a little bit to Y triple Q. Then I spent the balance on LFGY. A little bit more hedging and a little bit more upside, hopefully. So anyway, we'll see how that works. Okay, so let's see what else we have to look at. Well, let's look at I guess we can look at the model portfolio. It's just no longer the exactly right shares, but it was doing well. Come on, you got to be kidding me. All right, well, here we have it. The model portfolio is doing excellent. I'm just down. Come on. The model portfolio is doing excellent. It's just down 5 cents or 5 basis points, where the SPY's down 10 times that, 9 times that. Bonds are actually up today. Bonds doing a good job diversifying the 60-40 portfolio. But GPTY is down today, but GDXY is up today. And luckily, my little hedge, YQQQ, is also helping out, as is XOMO is actually up today. Anyway, it's gone. You're done, XOMO. It was just a starter position anyway. I should have got USOY, and I don't know what I was thinking. If oil pops up, I reevaluate every month. It's some month in the future I could always put oil back in, but right now there's nothing on my horizon that's showing oil momentum or oil anything. All right, so that's my model portfolio. Let's look at the GPTY verse and all that kind of stuff. No, it's not there. Where in the heck is this? Here it is, GPTY verse. Well, let's start here at ULTY. That's the allocations. Okay, here's the results. Great job, Hims. 20% performance today. That's something else. Does anyone, do we have any earnings trades? I'm kind of forgetting because we don't have much time left. I'll check the comments. Somebody mentioned doing Uber and a trade in Uber. I don't think Uber has, I don't think that's after the bell. I think that's tomorrow. So we can do that one a little bit. All right. Well, yeah, Hims is impressive. Of course, Oklo's impressive. Palantir holding us back a little bit. All right, that's nice though. Here's LFGY, my new holding. Off 1.5 today. It was a good time to buy it, right? Got it on sale. The average stock was actually up, mainly due to BitDeer. All right, so now let's check out a little GPTY, which is doing poorly today because of Palantir. Palantir being off 12%. All right, that sucks. Well, and on this one, what did we decide this was this morning? It wasn't Lam Research. It was Lattice Semiconductor. Anyway. All right, so that's that. What else do you guys want to look at? We can see how these option trades we did this morning are doing on paper, of course. So let's go look at them. Okay, day created. Buy the dip. That will buy the dip. Not working out. Is it down $102? I got 3 more days or 2 more days now. We'll see. All right. Bearish AMD play. Yeah, it's making $11. Somebody in Discord followed me into a trade with the broken wing butterfly. This is one of the broken wing butterfly trades I did. So maybe it was this trade they followed me into. I don't know. Bearish AMD. Bullish AMD, Palantir, call broken wing. Yeah, that one looks really nice. Of course, the main one and the first one I did. Remember, I was talking about that Palantir. I said, "Oh man, this has tons of buffer." It was like an 11% buffer, and I say usually I just get 7 or 8. And then I said it's probably because it happens earlier in the week and stuff. Well, it could have also probably been beset because it's because somebody knew it was going to drop 12% or whatever. Whatever I'm saying, whatever buffer it had wasn't quite enough, was it? At least not as of yet. So let's check Palantir. Let's go down and find that trade. There's trade with Amazon. Protection for 2 weeks. Palantir call broken wing. Neutral earnings trade down $9. Maybe that's the one. That's also, or that's not a broken wing butterfly. That's a iron something or another. I guess an iron condor on that one. Well, anyway, I don't know where. There's this Palantir one. God forbid. I'm sorry if you guys did it. I mean, it's down $479. I mean, they're right on the edge. If you look, they're right on the edge of the buffer. I mean, the white line's where it is now. If the market didn't move, and it's not going to not move, but if the market didn't move between now and Friday, this trade would be down about $160, $170. Of course, the market could also rally, but we'll see. In either event, your max loss is limited. So when you're selling a put spread and it's 10 strikes apart, think of it like buying a stock that costs 10 points. It's $1,000 worth of risk is my point. The risk on the spread is the distance between the legs. So, all right, well, What else we had to look at? Let's see if anyone else showed up in the comments and has a request. I'll take it. Hey, Mark, how you doing? It's great to see you here. All right, so Retire Cop, do you get your trades from OptionStat, Trade Vision, or are they totally different platforms that have different functions? Yes, different platforms, different functions. OptionStrat is for analysis. OptionStrat is what I like to do the most. I mean, it's moving strikes around and seeing the profit loss. I mean, that's for planning and stuff. Trade Vision is more of a charting package. It just kind of shows you what's happening. Now, it is real helpful. I find a lot of trades in Trade Vision with the AI feature, and they have a scanner where I scan for wheel stocks. So I get ideas from Trade Vision. But then when I want to see, okay, how far apart could I move the wings on this iron condor and still make it worthwhile? That's the perfect use case for OptionStrat. But also Trade Vision does have a little feature. I could show you, I don't want to talk about too much of this time, but a little feature that's just like OptionStrat. I mean, they basically have OptionStrat built into Trade Vision also. I'm just not too used to it yet. And I just prefer OptionStrat, but I guess in theory, I should be able to maybe in the future to just do it all through Trade Vision. Right now, I'm just so comfortable with OptionStrat. And also OptionStrat does have a few features that Trade Vision, as of this point, doesn't even have. Trade Vision's more of a competitor of like Thinkorswim. It's where I get my charts it's a charting package. It's more like a Trading View where we look at this all day. That's Trading View. Trade Vision's more like that. It's charts and numbers and that kind of stuff. All right. Well, I guess we could look at this Uber trade. I mean, it's after the market's closed, but I'll do one in the morning. On the morning show, we'll do one because Uber would be a great one to do it on if it doesn't have earnings. It may be too late. Gosh darn it. All right, let's just check out these earnings. Anyway, I'm hoping that I don't need to keep showing you how to do 3-leg risk reversals, all of you guys, because it's the same thing every time. But I'm happy to do them. Or if you guys do one and you want me to look at your stripes and stuff, and I'm happy to do it too. But I don't have any magic. I don't. Of course, I have no idea what's going to happen with the stock. I just like the math of it. So if you want me to check out the math, that's fine. And by all means, you tell me if I pick something that has bad freaking something besides math. I was putting out will candidates, and one of them I put out. And I remember I just run the screener, and the screener doesn't even have earnings and doesn't even have stuff like that. So pretty much if a company is between 20 and 40, and I've heard of them, and it's a name I've heard of, and it has anywhere decent option liquidity at all, I'm going to call that a will candidate. But you have to be careful because the worst thing about the will is you don't want to get caught back holding. So you'll make sure try to get fundamentally strong companies. Well, I mentioned IGT the other day, and one of our Discorders said it, pulled up an analyst ranking on it, and it was ranked like 0 out of 100 or, terrible, not a fundamentally strong stock at all. So, but my scanner in Trade Vision, it can just scan for numbers. So from now on, I'm going to put and that's kind of what we've been doing. We'll put the will candidates in Discord, and then you guys will help me throw them out. Once I read that comment, but anyway, it still takes the human eye. The human eye is the last amount of judgment. A scanner can tell you, these meet your mathematical qualifications, but all right. So earnings, let's do something. So tomorrow before the opens, Uber, sorry about that. I'm sorry. Let's look at one in ARM since it's not too late. You could put on the ARM trade in the morning or Carvana or sorry about the Uber trade. I should have done that right as soon as I got on here. Shopify. What's the deal with this one? Does anyone have qubits? Do you guys know anything about this? These quantum stocks, these quantum computer stocks are interesting to me sometimes. And I think this one was one of the ones I was interested in before. I'm clicking on it to see. But yeah, IGT definitely. I mean, it may have had the math for a Will candidate or whatever, but yeah, it's not a good enough stock. So I mean, I guess with the Will candidates, you need all the math to be there, and it has to be a stock that's somewhat fundamentally has some type of prospects for the future. On the other hand, though, everyone knows IGT is a terrible stock. That's why its price is so low. So it might be a decent time to start a Will, because, you know, if you believe in the efficient market hypothesis, which I do, but I also understand markets are far from perfectly efficient, but they are somewhat efficient. And the fact about them being somewhat efficient is what ruins the fun for everybody, because the markets being efficient is what keeps free money from happening. The efficient market hypothesis shuts the free money down in its track. Or if there is free money, the market's efficient and there's no longer free money because the market extracts it, right? And it won't be you or me that extracts it. It'll be, you know, Goldman Sachs, unfortunately. All right, so let's just do this. You guys, I guess, like to look at three legs. Let's just do this. You can do this in the morning. It's probably close to the same price. Let's check this out. Okay, let's see if it has enough liquidity. This is ARM, ARM. Oh gosh, tons of liquidity. Liquidity all day long. Heck yeah. Now that's the same thing I said about Planeteer. If you want, I can do this one going the other way if you guys want to do a bearish one. But all right, so there's the three legs. Just to refresh your memory, I always move the third leg out to the first standard deviation hash mark, the call leg, and then I put the put spread as far this way as I can. That's why I call it the loaded dice. I'm trying to make it, you know, just an unfair bet in the person who does its advantage. But we're going to have to scoot the put spread in a little bit closer because it's not producing income. Let's scoot it in a couple of closer strikes. It's also, and also usually I do two put spreads and one call, but you don't have to. You can also do two put spreads or three put spreads and two calls. You can try different ratios. All right, so now we're cooking. Look at this. $268 reward on $1,500 risk, so about 1/7. Let's scoot it out a little bit. Now, what is this? 158 on 1,500. Okay. Yeah. 10%. Maybe let's try it this way. Anyone know how to do Python? It'd be wonderful if somebody could write a script. There has to be, I'm sure there's a way to write a script that could spit out the optimum strikes, or that you could put in something and it would, anyway, and I wouldn't have to do trial and error, but trial and error is part of the fun of it. All right, 72% chance of profit, $261, take your wife to dinner on $1,500 risk. You know, and if they have good earnings, you're along for the ride. All right, I'll put that one in Discord because that one math wise anyway is a decent. Bullish earnings trade or bullish earnings idea. I'm going to give you guys a neutral one also, or I'm going to give a bearish one also. Hey, Dan, how are you doing? I'm sorry you're late. You haven't really missed much. The guys in here can catch you up. I don't know. All right. Let's look at this one. I have one more thing to show you guys. Let's go back to the editor. Let's do a neutral one in this. Let's do a little Let's do a little call butterfly. And let's just say we don't think this one's going to go. God, there's lots of liquidity. Look at this. There's only $63 risk on either side and $400 of reward. Anyway, all right. Let's just let's break the wing. So because we only want risk to one side. This is our neutral to bearish one. This is the one that paid off for us today on Palantir. All right. So $52 is your credit, and it's also your consolation prize if the market drops a lot. So this isn't a hedge or anything. It doesn't like make more as the market drops further. It's just a neutral neutral play with a bearish lean on it. We could also do it the other way if a person was bullish. You do that one right like that. 55% chance of. I mean, they're both good trades. These are some of my favorite trades. You guys know what you're really. Let me show you something. I was going to try to show you. Do you know that when you're doing a butterfly, you're really doing a ratio spread? It's really a ratio spread, and the third leg of the butterfly is just to define the risk because a ratio spread is undefined risk, and I don't do undefined risk trades, except covered calls. I mean, I guess your risk is defined, but it's all the way down to zero. People think they're so safe, but it's risky as the stock is. But I mean, that's the only trade I do with the risk down to zero. But I don't do very many of those. Because I like the three legs and other things. But anyway, all right. There's a neutral shot at earnings right there. You're just trying to collect the $52 and just hope they miss earnings. But even if they, and then you have about a 3% buffer. So, all right, here you guys have it. Hopefully maybe someone likes that one. Even if you don't like that one, just take that and play with it yourself. Mess with the legs and try to invent your own strategies, and then come show me what to do. Yeah, but I'm sorry. I hope no one bought IGT. It is a bad company. I mean, I didn't realize how low it was. It used to be a good company, but I'm an old man, so you know what I'm living in the 80s. Living in the 90s. Anyway. I'm trying to decide what I'm going to do with the rest of my afternoon. There's no rate cut yet. No. All right. Mark, here's how FOMC goes. We continue to be data dependent. Yeah. I got to take a nap too, Mark. I'm exhausted for some reason. I was up late. I'm going to sign off and I'm going to hit. Hey, I would take Jax for WALK. I don't know where he's at, but it's muddy and rainy and miserable day out here. All right. Well, anyway, Dan, thanks for getting here. I'm sorry you got here late, but like I said, you really didn't miss that much. I appreciate all of you being here, especially you retired cop. No, I don't really personally do the will strategy, but I have friends that are doing it, and I think it's more of a young man strategy. To me, the way the will was invented is you're supposed to want to get stocked. You sell the option to get you involved, and boy, then the stock, then you get it's kind of a way to teach people about options. And it's a fun way to acquire stock. I'm not looking to acquire assets. I want income at this point in my life. I have enough stock. So I have a friend's son who's doing the will. And it makes a use case in an IRA, in a Roth, and he's smart as hell, and he's going to grow that money tax free. He sells puts. I mean, not only does he does the will, he just trades options generally, but it's pretty much the will. So yeah, so I'm always looking for stocks for him. But he's a smart kid. He's already in SoFi. SoFi is the best will stock in the world, and he watches some other influencers. I don't even think he watches me. He probably watches some younger influencers. But anyway, but so when I'm talking about will candidates, it's usually for other people. Now, I've thought about teaching a course before on my version of the will, or writing a book or a pamphlet or an e-guide or something, or I don't know. But I prefer the way I do it. And it's not really the will, the way I do it. would be more closely called the gravy train or the treadmill, because I'm not trying to. Really the goal of the will is to get stock. I mean, and I know that you write the call and try to sell. I mean, but really it's kind of fun to have stock because you're hoping the call doesn't. You're hoping it goes up, and you write the call far enough out of the money. You know that you do the strategy right. You're trying to get some upside stock appreciation. That's not what I'm going for. I just want that freaking 10% every week, one week after the other, after the other, after the other. Whenever I pick a bad stock, I don't want to lose 20%. I want to lose 3 or 4, whatever, however big the width between my strikes is, So anyway, but when I'm talking about the will and talking about stocks, and as you guys know, the reason I asked you guys a bunch, I'm not that comfortable in individual stocks. I don't study them that much, but you guys know a bunch about individual stocks. So I figure between the two of us, I just try to scan for options that are liquid enough to do the will. And then we just got to put it together with a good stock. Now, have you checked out this stock? Let's check out this stock. Let's see. Let's check it out. Let's check it out here. But I've been barely able to keep my eyes open all afternoon. I was just waiting to get this over with. But I wanted to come on here and tell you about the trades I did in the model account. So tonight when I get the statement, I'll update all the freaking everything, and we'll look at it tomorrow. I put quite a bit more into, I put more than I was planning on into YQQQ. Did anyone else watch Paul Tudor Jones this morning? And does anyone else know who he is? He's a big hero to people in my generation. When I was first got into the market in the 80s and 90s, he was on CNBC all the time. I mean, very well respected. He was like the Tom Lee, but back in the 80s, in the 90s too. Very well respected. And he's a futures trader. And he called the 87 crash right and was short 1,000 futures contracts or something, and made a life-changing fortune, and with like that. And he's really an interesting guy. He always makes an interesting interview. Anyway, he said that the low's not in. He said even if they come back and cut the tariffs back to 50% on China, which is what he expects, that it's going to come back and all of a sudden it's not going to be 145 anymore. It's going to be 50 or 40 or whatever. That's what he was saying. He's saying the damage is still done and we're still going to make a new low. Now, he didn't say the market was going to zero. He didn't say to give up on but I trust his opinion. I don't know that it is, but I'm saying now that it's in my mind that I think there's a better chance of it happening now that I've heard it from him, or I can see it a little bit more now. So I added a few shares to YQQQ. I doubt it's even 20% still. I probably went from 13 to like 17 or something, but I did add some shares to it. And I'm gonna hate myself if the market doesn't sell off, and that's why I didn't add too many shares to it. I could still do all right in an up market, but yeah, I added a few shares to YQQQ. So sold XOMO, bought a little bit more YQQQ, and sold a little bit of GPTY, not too much, just trimmed a little bit, and then put the balance in LFGY. You guys think I made the right decision? I mean, I guess we don't know. It's hard to tell what is the right decision. I mean, we don't know for a long time. So, it's easier to find out in hindsight. But yeah, no, I'm not personally doing the will strategy. But if somebody stuck a gun to my head and make me do one, I would just, here's what I like, and here's what my e-guide will be, or whatever on my course. The problem with the will is it's 2 steps. I mean, so you sell the put, and then what are you hoping? You're actually kind of hoping to get the stock. Like I say, when you're really doing the will, you want to get the stock so you can sell options on it. Right? So I was trying to think where I was going with that. Okay, well, a conventional will guy, like my friend's son, he wants the stock because then he's going to write options, make a lot of money on that. I'm just trying to get the premium. You know, it's I'm just trying to extract the premium. The problem with the two-step wheel, the way the wheel's supposed to be done, so you get the stock, but then wonder if the market comes down, and then you have to write a call underneath your cost basis. Some people don't like doing that, and they get stuck with the stock. All right, the wheel has two steps. So you have to have two things right happen to you. You know, when you sell the put, you have to have the market go down enough where you can get the stock, but not go down so much you don't want to get the stock anymore. But then that can happen. But so, you know, that's the first thing that has to go right in the wheel. And then step two. So then once you have the stock, you're like, oh goody, oh goody. Then what's the next step? You know, then the next step is you write an out of the money call and you root for a little bit of upside, because you're going to make the upside until you get to that strike price. So for you to make, you know, what you want to do is you want to pick up stock and you want the stock to go up and you want to extract the option premium from it. It's a lot of things that have to happen at once. So you can do that in one step. But I wonder if a guy, instead of selling a put naked, which is the first step of the regular wheel, wonder if a guy sold a put spread, and just like I just showed you, maybe he sold two of them and then used about half the money from the income from the put spread to buy one standard deviation out of the money call. There you have your three leg, and it's the risk where you've done the whole thing in one step. Because wonder if the stock goes straight up. You never got it. You wrote your put and you never got it. The stock's up 10 points and you're screwed. If you did the three leg, right? Not if you did the three leg, you're loving life. Okay. There's no reason to do it in two steps. It's just one step. You can and just repeat it. And that's why I call it the gravy, and just repeat. It's not a wheel. I'm not trying to it's a gravy train. That's what I'm trying to do. Anyway, hey, Sean, how are you doing? So what's out? AMD earnings are out. Oh gosh. Well, we had a little problem looking at earnings yesterday. Let me try to find a better way to do this. Usually this earnings hub is a pretty good source for earnings. It's just running so slow. But yeah, well, let's check it out. All this rain is moving off into Louisiana. It looks like I'm watching the radar. All right, so let's just click here. Sometimes you get pretty good information just from this earnings hub. You can even listen to the earnings call and stuff from this app. And I just never do it because it's too boring. You know me, I don't want any of the facts or the details to figure. I'm just a big picture guy. I just want what's the IV, how much is the option, so forth. Anyway, for whatever reason, it's not working. What in the heck is going on with this? Somebody get on. Gosh darn it. I guess Tasty Trade has after hours quotes. I mean, of course. I have so many places. I have Tasty Trade. I have Traded Vision. I have Trading View. Traded View doesn't have after hours. It does, but I don't pay for it. Tasty Trade does, but it's too slow to get open, and I don't always have it open and stuff. Gosh. All right, AMD stock. All right. Well, I don't know where to look for after hours. There it is. 105.10. Hell yeah. Heck yeah. 105.10. We got it over there in this after hours chart. We can bring it up right like that. I thought that brought it full screen. Well, there it is. It should become full screen, right? Anyway. All right. Perfect. All right. So let's go see. And we don't even need to look at the three leg. I don't know if I showed you guys one or not, but I don't even need to look at it because I know the way I do them, and I do them where if it goes up at all, I'm fine. And really, if it goes up 10%, you might be in the bonus territory. It's actually the only thing you're looking for at that point. Boy, wouldn't that be sweet? Wouldn't that be freaking sweet? Let's go look. I think I showed you guys an AMD one, or I don't know. I think I did it, but I didn't save it this morning. I did it this morning, and I didn't save it. I said, you guys can probably just look at the spread. Oh no, there it is. There it is. I did do it. Okay. I did bearish, bullish, and I do so many of these. I guess I just did bearish and bullish. So let's look at bullish. Bullish was up $11.50 before the close. I mean, but it's, this thing's at 110 now. So the price is right on the first standard deviation. See, the first standard deviation line's right there at 886. And so that's where we get into the bonus time. That's where we get our time and a half, or overtime, or whatever you want to call it. But yeah, that right there is a will. You go do the will on AMD. That's fine. And I'm going to do 3 legs on AMD. And we're going to make about the same amount of money. I might not make as much as you off yield, because I'm spending this extra money on this put, this out of the money put, because I'm not into bag holding. But I'm probably going to get more upside than you, because the will, it depends on the path dependency of the will. It depends on what step you're on when the stock goes up. If you're on step 1 and you sell the put, the stock goes straight up 10 points. It's almost like you lost that 10 points, because but if you're on step 2, you kind of want it to go up 10 steps, because you write the out of the money call. Let's say you write an option 5 points out of the money and it goes up 10 points. So that's fine. It goes through your strike. And then hopefully at that point you can roll it before it gets exercised and keep doing it. That's the whole deal. This is one step. You don't have to worry about the timing. If it happens on step 1, you're set. If it doesn't happen until step 3, you're set. You don't have to worry about holding the bag, because you got this extra put down here. Anyway, I just need to make a course on it or something. You guys probably all know this. I'm trying to think of maybe teaching people that don't know about options, or maybe trying to find some new people to teach or something. But I do think there's value in these types of strategies. All right, guys, AMD earnings are out. So we looked at them. AMD's up. If you did either of the 2 trades, or if you did the bullish one, you're probably all right. Let's see the bearish one. Let's see how the bearish one's going. That arm trade's not terrible. I wouldn't be surprised if somebody did that. On the all right, bearish AMD trade. Let's take a look at that, see where we need to be. All of my trades have a buffer, so even though it's bearish with a buffer. And look, it's within side of the buffer. Oh, no, it isn't. I'm sorry. The market's at 110, and yeah, so we aren't inside of the buffer. We're just outside of the buffer. Market could always come back, whatever. But the other thing, it's your loss is capped. I mean, that's the only saving grace. It sucks you lost, but you don't have to worry about it. You don't have to worry about getting short squeezed, because oh, hang on. I just noticed something here. Oh, no, I'm sorry. I thought this was a 3-leg risk reversal. This is a broken wing butterfly. All right. Well, anyway. All right. AMD earnings are out. Anything else you guys want to talk about? Be happy to talk about it. Thanks for being here today, Sean and Dan and Mark. Mark's probably asleep. Blackwater. I'm sorry I didn't see you earlier. How do you think the FOMC goes? I do think so. I've been thinking the whole time that we were going to get a surprise rate cut. I was thinking that Powell would go ahead and give in. I've heard somebody make a case tomorrow that they'll probably just cut it tomorrow at the meeting. I'm not making any plays based on that, and it goes opposite of what Powell said. He said he doesn't want to help Trump. He doesn't appear to be the hugest Trumper and stuff. But still, though, there's so many forces, so many moving parts at play there and stuff. I'm thinking that the Fed's going to help old Trumpy out. In the final analysis, I think the Fed's going to come through for him. But I don't know. Anyway, we'll have a live stream tomorrow. Maybe I'll come on at 1:00 and we can listen to him talk or something. If it's something you guys are interested in, we could do a straddle or something before in the morning if you guys want to, and come on at 1:00 and root for volatility or something. Also in the morning show, we'll do a pre-Fed earnings trade. I'll show you, or not Fed earnings. We'll do a pre-Fed trade. I think maybe tomorrow morning, let's try to find a trade. Volatility is going to be crazy jacked on tomorrow's options. Tomorrow morning, we'll try to find a trade that says basically the Fed's a non-event, just in case. I mean, maybe we'll play a stationary type trade or something. Because lots of times, if everyone expects a big move, it doesn't materialize, and vice versa. But maybe we'll put on some kind of like iron butterfly or something for the. I hope it goes better than the buy the dip I did today. But oh well, it's like I said, that was only 5% of my trading account, which is only 1% of my net worth. So that's all I did. Just like Tasty Trade says, stay small, trade often, or whatever they say. Guys, I appreciate y'all for being here, and I hope you have a wonderful day. Hit me up in Discord if there's anything you want to talk about tonight. I'm working on some new videos, so be looking for those. They should be out soon. See ya.